What do you guys, good people? Hope you guys are good. And we back again. Like I said, we just continue from the previous session. So without further ado, we've done price action, right? And if you have questions, hit me in the comment section, or I'll put my contact details whereby you can dive deep into that. So the second topic is point of interest, right? So I'm gonna go through these topics individually, and then at the end, I'm gonna show you how to narrate them and combine them together, right? Point of interest. What's a point of interest, right? A point of interest, it's a zone. I always say it's a zone that we're looking to take action from. Like that's where we're looking to decide, are we buying or selling after getting the analogy of which side of the market are we on? Are we selling? Are we buying? Are we selling? Are we buying? Right? So what are those are what we call points of interest. That's where we're looking to buy, right? Because you can't just look at the pure price action or charts and be like, okay, we're in an uptrend, I'm gonna buy. Nope, it doesn't work like that because there's a lot of aspects or things to consider before doing that, right? So that was just the first part of it, right? So now you need to be able to gauge point of interest. What a point of interest? There's plenty point of interest in the market depending on which strategy you use. So I'm gonna list them all and then name my favorite. So we have multiple point of interest. I almost said we have five or six. I don't know how many there are. There's plenty of things you could call points of interest, but I'm just gonna list the ones I know, right? And those that work for me the most. So without further ado, wasting time on this clip as well. I'm just gonna so the first one it's fair value gaps. Fair value gaps. So this is my favorite one, the fair value gaps. And the second one is supply and demand. Sorry, supply and demand, right? And the third one, what else is there? Is breakup blocks. Breakup blocks. Breakup blocks. I don't really use breakup blocks, but they're also important should you want to play around and also test them. So the main one are the main ones are focused on is the fair value gaps, supply and demand, and breaker blocks. So I'm gonna break down each and every one of them quick, right? So I'm gonna use one example of an uptrend. So like I said, we create a point and we create a low point, and then we break once we break the this point, it means we're in an uptrend because we're breaking away to the upside, right? But now when you break this thing, it's in a format of candlesticks, right? So this is just narration here, but you all know it's in a format of candlesticks, right? So I'm just gonna narrate candlesticks here shortly. So we pushing up, and then now we have that small retracement before we break. I'm just gonna change the color to red. Just gonna narrate it as clean as I can. Then we're now moving upwards, breaking that zone. Obviously, the candlestick will be green, and then boom. No, sorry. Boom, boom. So now we have an uptrend example, right? But mind you, now, just gonna draw this. On the charts, we have wicks. Wicks. We call these sticks that you see next to the candlesticks. I mean, wicks, right? I'm just gonna do them in red because it's gonna waste time changing these things to black and stuff like that. It's gonna, but you'll know it's just wicks, right? Wicks, wicks. So now that we have this example, right? I'm gonna go ahead and delete this line, right? This is an example of what you see in the chart in an uptrend. So as we can see here, we've broken structure to the upside. Broken structure to the upside. So before I explain each and every one of them, I'm going to explain where to find how to spot a fair value gap, how to spot the supply and demand. So I'm going to start with the fair value gap. A fair value gap, it's a gap between price. So if we can look at this here, I want you to look at this part of the candlestick. So we're going up, right? So as we can see, as we're going up with these candlesticks, the wicks are overlapping with each other, right? Are overlapping. So there's a wick here, then the candle form, there's a wick here, and then they're overlapping with each other. But then here's another upward movement I want you to check, right? So as you can see, this upward movement, the wicks are overlapping on these three, but on this area here, we have a gap that's left. There's no wick, especially after this candlestick was formed. There's no wick, nothing at all. It's just a space in between. We call those fair value gaps, right? And I want to quickly show you them here on the charts as well. So you see here, the market pushed up, creating these candlesticks, and there's this space here. You see this space here from the body to this down wick. It's a fair value gap, right? Even here, there's no wick. It's a fair value gap, right? Even here, the space here, there's no wick. It's a fair value gap, right? Even here, in the space here, it's a family gap. So basically, just to narrate it short, you need three candles to form a family gap, but they must create a gap. If they overlap with each other, I'm going to show you now. So three candlesticks, one, two, three, right? And if the wicks, because sometimes the wick can be long. If the wick is long and it covers the space, it's not a family gap. But let's say the wick is like this short, and then um let's say there's the wick, and then let me duplicate it again. So then there's this wick here. The middle candle must create the gap, not the top one, the middle candle. So you need three candlesticks. Clone here as well. And then this and a ledge. Right? So there you go. So you see, what do you see here? You see in between this middle candle, the wicks were not overlapping, because sometimes they can do this. The wicks can do this, and then this one as well can be like this, right? But then when you put, there's no gap because the wicks closed that gap. But sometimes you find the wicks are small. Even sometimes it's just the body. It's just the body and there's no wick, and it could be like this. But as long as it leaves a gap, we call that fair value gaps. It's when price moves too quickly that it leaves a gap, and the market must come back and fill that gap. We call it a point of interest. So you can find them in either a selling format. If we look in a selling format, these things will be red. These candlestick will be red. I'm going to show you an example as well, right? Same here. This is an upwards example. So this is a buying in an uptrend, you'll find fair value gaps like this, right? So you can spot them like I showed you here. For sure, now you're able to spot them. Fair value gap. They could be small, they could be big. You see, fair value gap even here. Do you see that spacing? Fair value gap. I'm just gonna show you everything. I'm not gonna show you processfully, right? I'm just gonna show you how to spot them. This is also a fair value gap. This is also a fair value gap, right? Same analogy when we're selling. This is also a fair value gap of a selling market. Just gonna change the color to red. Where else? Where else? Help me spot these fair value gaps. Sometimes I don't even see them all. Right? Fair value gap, even here. Fair value gap, fair value gap, fair value gap. A big buying fair value gap. Well, this one is a buying one. Because you must align them with the trend. This one is a selling one, fair value gap. So I could go on and on in spotting these gaps, right? So these gaps are point of interest. It's areas whereby the market must come back and fill them. And from there, we could look at a continuation of the same trend we kind of analyze using price action and all those things, right? So that's how you spot fair value gaps and how you utilize them in a market. You see, this is a live market right now. This, if I was to be looking for a buy, I'd be looking to, because price wise, we can see we broke structure to the upside and we're still moving to the upside, right? So if I already, I know I'm looking for buys in this market, right? This is a live market. We can see now time is moving. I'll be looking for entries in my fair value gap areas. And if you could see, if we could zoom in, probably this was yesterday's price action. We created another fair value gap here. Look. And when you created this fair value gap, what did price do? It reacted in this point. This is where I'll be looking for buying entries. Because as much as you can see the trend, you need to find those perfect sweet spots whereby you're looking to enter, right? Without wasting further more time again, now we go to sporting. What's happening now? Oh, I'm gonna zoom out. Now we go into sporting our supply and demand, right? So I'm still gonna use the uptrend example. I'm just gonna delete this. Same analogy. So look here. How do you spot a supply and demand, right? First of all, what's a supply? What's demand, right? One thing about me, guys, I won't lie to you and say I understand what they are, right? I understand what they are and how to spot them, but they sometimes confuse me. Which one is supply? Or do we look for supply when we're buying? Do we look for supply when we demand? So bear with me, or you could just use your Google. Sometimes you don't need to be like too smart for these things. Just find some simpler method that's gonna help you understand it. I know what they are. I just sometimes they confuse me in terms of wording. That's why I told you at first. For me, it's not important to focus on the wording and stuff like that. So if I'm correct, a supply you find it in an uptrend, right? And demand, you find it in a downtrend, right? And so for this, because it's an example of an uptrend, we're looking to spot a supply zone. A supply zone, if there's too much supply, what do you do? Let's just take the word supply and demand in general sense. Yeah. If you own a store and you have too much supply, what do you need to do? You need to sell the supply, right? So meaning client people will buy. That's a buying point, right? And if you have too much demand, what do? You need to, is that analogy even correct? I don't even know. You see, now that's where they confuse me. Which one is demand now? Because they all sound the same. But nevertheless, I won't cut this video and edit this part, right? That's how I am in terms of like wording. They sometimes confuse me. So like I said, Google, this is not knowledge. It's just wording. Just Google and then you understand them. But I'll show you how to spot them now. So let's just say, for goodness sake, if I'm correct, this is supply. So if the market is moving, we're in an uptrend, right? We spotted our trend, we spotted everything. Um, 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 we're pushing upwards, and then we create this reversal, and then this low point breaks structure, right? We go look at the low that break the structure, which in this case, it's this low here, right? And we're gonna look for, sometimes you could look for the last, depending, sometimes I just look at the size, which is something I explain more in details in the mentorship. So the last, if we are buying, the last red candlesticks before that shoot to the upside. That's my supply zone. So I'll mark it like this. This whole two candlesticks will be my supply zone. It's a point of interest, meaning if the market decides to turn, I'll wait for it to come back in the zone, and that's where I'll buy, right? I won't just buy here because the market is trending. I'll just wait for it to come back into the supply zone, and then I'll buy or the fair value gap. It's a good thing if they aligned with the fair value gap and everything. You see, for example, here, this supply zone is mixed with what? If you remember our previous topic, a fair value gap. Powerful, right? But that doesn't mean now you get to the point and take buys. No, we're still gonna get to the part which is like now entries and timing and everything, right? So this is how vice versa. I'm just gonna um 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 invert the scale. Vice versa, if we're looking for a sell, obviously candlesticks will be red and the last green candlesticks to create that zone, you'll mark them, and then these candlesticks will obviously be red, and you just wait for a return into the zone, and then you're looking to sell off, right? Let's do a practical example on the charts whereby you could see this, right? Um, mm, I don't want to look for a clean example. I just want to look at the point. For example, look here, right? Um, we're coming from down there, retraced a bit, and then we broke that structure. Uh, sorry, let me just, we broke that structure to the upside, right? And then we returned to this zone, right? In this instance, this whole area would be my supply zone. And would have also a fair value gap here. And sometimes this is where it's confusing. You'd find you have a fair value gap up there and you have a supply zone or demand zone there, right? And you'd be deciding, where do I take my buys? That's where now we'll talk that in details in entries, whereby you need to find confirmations. And then this is where you'll know. So your job is just to say, okay, I'm buying. And if I'm buying, I'm looking to buy at this point, or at that point, or at this point. But how will I know which point is correct to buy? By getting those confirmation you need. That's when now we're going to dive into um, time frames on the other topic and break it down more advancedly. So if you do have questions regarding this, like I said, um, um, pop in questions. I'm also open to being corrected because one thing about trading, guys, you're always a student to the game. Yes, I'm a mentor, but I'm always a student to the game. Like I always say to my clients, I'm always a student to the game, and I'm willing to learn from literally anyone, whether it be a beginner, because some people we see things different. You might see something. That's why I'm even dropping this whole mentorship so that you look at it from your point of view and maybe you might pick up something from it. I've had students who just went through my mentorship and they picked up a lot of things and they're not even using strategies I showed them, but they're profitable, right? Because you need to have that mindset in trading. Even me, my first mentor, I don't really trade how he trades. I kind of look at how he trades some type of way now, but that mentorship helped me a lot because I grabbed a few things and ran with them. And also the understanding, sometimes that's what's important often. So without further ado, vice versa with the sell as well. I'm just gonna invert the scale. Vice versa if with the sell. So if we're selling, you just with break structure to the downside, you have your demand zone and your fair value gap. Those are POIs. Even with the breakup block, it's POIs. POIs are just zones I'm looking to react. It's not, hey, it's that zone I'm gonna get there and buy or get there and sell. No. Zones I'm looking to react. So sometimes you might find it's like many zones. I'm just gonna mark random, many zones in that um um range, and you're like, which one do I take? Take the one where you get confirmations on. So the market, because the market can run through them, like you see here what it did. As soon as it turned, it opened with a gap, boom, ran through this and reacted on the last zone, which means it invalidated all these zones. You're no longer going to use them. You're going to use the one it reacts on, and then that's where you look for an entry, and then pew, you have your execution point, right? So without further ado, guys, I'll see you on the next topic and let's jump right into it. Sharp, sharp.